Hey, Justin, you're muted.
Appreciate you. Always on top of stuff. Yeah.
Yeah, I thought it was my speaker. I'm like, my computer's messed up. Okay, thank you.
No, I appreciate it. I appreciate it. So yeah, so actually I was saying right there, guys, I was saying, welcome. Thanks for hopping in here with me. If you haven't been in the Zoom with me before, it's super laid back. There's no like wrong questions or dumb questions or anything like that. There's no too beginner. So, feel free to unmute yourself at any time. Unless you have background noise, then please mute yourself. But you want to unmute yourself and ask a question, feel free to. If I'm explaining something you don't quite get, feel free to ask me to slow down or, repeat myself or anything like that. So it's just super laid back. It's very casual setting. It's not like a business style setting. So just let me know, as I go along. So I'm just going to talk about some of the basic stuff starting out. I'm going to do the charts for Bitcoin, for Ethereum, and for Cardano. And then I wanted to touch base on Chainlink, because Chainlink is an important protocol for cryptocurrency that I feel like a lot of people don't. It goes flies under the radar. Not a lot of people know about it. I was going to talk about EIP 1559. EIP 1559, which is the new Ethereum update. Where is this website I'm looking for? And in that update, it now is working towards, it hasn't completed it yet, but it's working towards making Ethereum a deflationary asset by burning the Ethereum. So I'm gonna touch on that as well, and then I'll answer any questions you guys have if anybody has any questions, or if they want me to show a little charting for any specific coin. So let me pull up a different chart here, Bitcoin. All right, so starting out, first things first, I want you to point out this yellow line here is the 20-week moving average. So moving average is just a combination of all of these candlesticks. Oh, I'm sorry, we're gonna start on a daily chart. So anytime you're doing charting, well, at least for me, I like to be on a daily chart because that gives us a better picture of a longer time frame of what's going on. Sometimes on these charts, I have drawings from previous sessions I did with people, so I apologize if you see those. So the yellow line here, this is the 20-week moving average. So each candlestick represents 1 day, because we're on a daily chart. So each candlestick represents 1 day. And this yellow line represents the average price over the past 20 weeks of Bitcoin, right? We're on Bitcoin on the top left. This yellow line here shows you the average price over the past 20 weeks. That's extremely important because that's where the price usually likes to live, as I say. So the price goes on vacation, right? It goes on vacation down here sometimes, and it goes on vacation up here sometimes. But at the end of the day, it's usually going to live right around that moving average, which is, pretty sensible, obviously, right? And an average number gives you like the median. So you can see like the price over here extended up above, but eventually it came back down and found that moving average. So the two moving averages that are the biggest line in the sand moving averages are the 20-week, which again is the yellow line or gold line, and the 200-day EMA. EMA is exponential moving average. Again, it's the moving average of the last 200 days, but because it's exponential, that means that it takes more of a weighted average towards the last about 20 to 50 days of that 200, right? So instead of it just following this up curve, it takes into consideration heavily on the more recent data. So it's a little bit lower. So those are two big averages, and that's one of the reasons why I wanted to do the Zoom, because it helps dictate where we're going to be headed next. When we are above the moving average, see how these candles are above the yellow line? When we are above the moving average, that usually is like a good indicator that we are in a bullish run, or we have bullish sentiment. When you're above the moving average, it lets you know that there's more people that are willing to buy into the market than are not, right? And when we're below the moving average, the exact opposite, there's less people that want to buy into the market. And that's easily determined. If you guys don't know, you can go to coinmarketcap.com. And at the top there, they have the market cap. So $1.7 billion. No, trillion dollars, sorry. So $1.7 trillion is the current market cap. So if we want to know, okay, do we think the market is going to continue to pile in money, or is it going to cool off for a little bit? Are people going to be leaving their money out? A good indication of that is the 20-week moving average. Another thing you want to know about the moving averages, when the candles, so these candles, right? When the candles are above the moving average, so all this time, right? They're all above the yellow line. They're all above the moving average. When the candles are above the moving average acts as support, so S. And when I say support, it's like just like you would support something up, right? Like if I'm holding something up, I'm supporting it up. So the same thing, when the candles are above the moving average acts as support. So that's why it's above here, it bounces and it touches it, but it's holding it up. The moving average is holding all these candles up. And then we get the bullish run to continue. And adversely to that, let me go back a little bit. When the candles are below the moving average, it acts as resistance. So we'll draw the R down here, resistance, right? So you can see it tries to go up above it, but it's resisting it. It's holding it down. It's resisting it. So keep holding it down. Boom, it's holding it down. It tried to go above it. It did for a second, and then it pushed it back down. Tried to go above it, pushed it back down. And you can see that continues on, and then we fall deeper until we finally, right here, that green candle, we finally break the moving average to the upside. So what you really want to find out, I mean, and this goes for anything, any charting you're doing, but especially with cryptocurrency, you want to find cryptos that are either at their moving average or just a slight bit above it. Because once this happens, this circle that I have drawn here, the big candle, once that big candle happens, then that officially shows that we not only broke through the little bit of support here, but now it got verified and we're on our way up, right? So that's what we want to see. We want to see the support again, the support if the candles are on top, the resistance if it's on bottom. So right now it's resistance because these candles are on bottom. So we want to break through that resistance, and then we want to get a big confirmation candle that lets us continue our upswing, headed up into like a bullish run. So this was actually back, you can see the date at the bottom, towards the bottom of the screen, March 28th, 2019. So sorry, so March 28th, 2019. All right, so now that you have that, you can grasp that little concept. Again, shout out if you need me to, explain that a little bit further. So now we'll move forward and we'll see the same thing that I was explaining here, right? We tried to help, like right here, the support held it up. It didn't go under it. Support right here held this one up. And then finally we broke down below it. So now since we're below it, it becomes resistance. And you see we go along and we try to break it, but we don't break out because it's resisting, it's holding us down. Let me add some people in here. So it's resisting, it's holding us down right there. And you can see we stay below it, we stay below it. Finally, we break through it on this big green candle, we break through it, we come back down. And now this is important to understand this part as well. When we finally get to break through here, we get this breakthrough. Now we come down and we test our support, right? Because so all these candles were in resistance mode. They were being resisted. Then we broke through resistance. So now we're in support. And now we got to test our support. We come down and is our support going to hold? And luckily this one held. So that's awesome for us. The support was held. And now we move back to the upside. As we go back to the upside, we see we come back down over here. We're testing support. And we bounce off support, so we're happy, but then we get a big drop. So we're like, ah, man, support has been broken. And then now this was March 20, 2020. Same thing played out. I'm basically just going over this to give you guys, because when we get to the up-to-date time frame, it'll make more sense. So now again, we're down below, so it's resistance. We're going up, we fight it, big green candle, we break through resistance. We come back down, we test support, the support holds, and now we continue up. And then again, right here, support, support, support held. So now we continue up. And now we finally get a big move that we really wanted. So then we get a huge move to the upside. So it's funny looking back at all this stuff, how these moves look so little in comparison to these bigger moves. So the same thing is going on right now. And that's why I think it's important to have these calls and make sure you're on top of things, at this point. Because exactly what we were just describing, same thing was happening over here. We came down, we held support right there. We held support for like 1 or 2 days, because remember, each candlestick is 1 day. So you can see we tried to hold support here for 1 or 2 days, but then eventually we did fall below it. So now we're underneath and we're hanging out, and we've been hanging out and we've been doing nothing but consolidating. When the candles are all sitting on a pretty, not exact line, but oops, 1 second. The candles aren't on an exact line, but it's pretty close. They're all hanging out. This is called consolidation. So we've just been consolidating in this whole time. We've actually been in a range. We've been in a range from about 29,000 up to about 42,000. And so now I'll switch back to my main chart, which is here. And inside of this purple box, it shows the range that we've been in. So ever since we fell down, we've just been bouncing around and hanging out in this range, consolidating. Then we finally get a big move to the upside. But remember, the candles are below the line. So any lines that you draw, if the candles are below it, that's resistance. So we got a big move to the upside. We went right to one of the lines I drew. We got pushed back down, and then we finally broke the line. All right, so I'm gonna try to take some of this stuff out of here so it's not as confusing for you. 1 sec. So I'm gonna remove this trend line. All right, so now the main thing, just like actually I'll go back to this one. So now the main thing is, remember, we're underneath of this yellow line, this moving average, right? So we need to break through that. Remember, we want that big green candle to go up, and then that means we broke through it, and then we want another candle up. We can come back down and test it and make it hold us at support, and then we can start moving back up to the upside. So that's ultimately what we would really want to happen in this situation. But remember when we were first describing it, that if the candles are below, the average is acting as resistance. So it's harder for us to break up through that because it's acting as resistance. So right now we have a big decision that needs to be made. We need to find out if we're going to start moving up, because we don't want to miss all the gains if we start going to the upside. So this is the key levels to be watching for right now. If we're going to break, and I'll draw another line here. Oops. So we got another line there. So we need to break above that line. And once we get above that line, we want to keep going up, keep going up, keep going up. And then it sounds kind of redundant to do so, but we actually want to not only keep going up. Do this again. All right, so we don't want to only go up. What we want to do is go up, come back down, and test this as support, right? So imagine we expand that line over. We want to test it as support, because if our support holds, that means we have a good chance of continuing in our uptrend. And if our support does not hold, if we go up, like these candles are showing, like if we're going up, going up, going up, we come back down for the test. If our test breaks down and we come back down, we know that this was not a legitimate breakout. It was a fake out. We got faked out. So a lot of times that happens to get people to FOMO in and put their money in, and then the market dumps on you. They sell up here, and then the market goes down, and then you get scared, you sell down here, then the market goes down a little bit more, and then all the people that sold to you originally right here all buy back in right here. And that's just how the the normal retail investor, that's just how they think, that's how they process things. So that's a big reason why I like to do this stuff to help us get that same understanding, right? So again, what we're looking for right now is a breakout here above that yellow line, above our moving average. And then to confirm it, we need to come down and test it as support. Once we get our confirmation that support was tested and it's going back up, then we want to buy. So I wouldn't suggest buying right this very second, because we haven't confirmed it yet. If you buy right this very second and we're still in that resistance mode and we're trying to go up, but we keep getting rejected and we end up coming back down for a little while, then some people are going to be upset because they could have bought just a little bit cheaper. In my overall opinion, in the macro view of things, in the big picture view of things, I think you should always be buying Bitcoin. I think you should be dollar cost averaging in, whatever you can afford, $10, $20, $100, $500, whatever your situation can allow. You just put in that amount once a month, once a week, however you want to do it. So if you had $100, let's say every Monday you put in $25, you don't think about the price, because in 5 years, the price is going, in my opinion, again, this is not financial advice, but in my opinion, the price is going to appreciate to such a value that you're not going to be concerned whether you paid $39,000 or whether you paid $42,000. The biggest concern is going to be how much Bitcoin do you have. So That's in the generality speaking. So again, right now, what we're watching for is to see if we break above this moving average, and if we do, we want to buy on the retest. So when it comes back down here, this is when we buy, because if it retests successfully, then we go back up. All right. So that's the first thing on Bitcoin. Now, if you want like a price prediction of where I would think Bitcoin is probably going to head to, let's do, first we'll do the longer term view and then the shorter term view. So the longer term view, this is our all-time high right now, 64K. We'll put a line there. And we know that Fibonacci retracements, if anyone that's been in previous Zooms, I use Fibonacci retracements often, that it usually retraces to the 0.618 level. That's called the golden level. So when I'm doing a Fibonacci retracement, I start at the lowest bottom part of a trend. And if you're not quite sure what I mean by that, let me zoom in and show you. So you can see here, we started a little uptick trend here, but then we kind of just leveled off for a while, and then we broke trend by coming down. So the same thing here, we started a little trend, and if I make this a little bit bigger, you can see it probably a little bit better. You know, we started a little trend here, and then we broke back down. We started a little trend, broke back down, started a trend, broke even, and then we started a clear trend back up. All right, so now I zoom back over to this side. So I'm gonna start my Fibonacci right from this point, right where we started this trend back up. Now let me make this chart easy to see. All right, so I take the Fibonacci tool, and remember we're starting this trend right where it started back up here. I run it to the highest point, which is right there. And so if you're unaware, this Fibonacci tool is very powerful, and there's something called the golden level. 0.618 is the golden level of Fibonacci retracement. If you're an earner with EIL, we actually had a call, and it's on the Facebook group live, and I walk through exactly how to set up these Fibonacci's, and I backtrack all the way to 2013 using them and showing like them being successful. So if you are an earner, I suggest going to the Facebook page and rewatching that, and you'll probably get an even better understanding of this. But again, so I use the Fibonacci tool starting from the bottom of the trend up to the highest point of the trend. And I know that, you know, most of the time the Fibonacci retraces to the 0.618 level. So we can see here, it did that almost exactly. So the same thing when we were talking about the lines, right? So this is a line, this 0.618, you can see that line that extends through it, the darker green line. And now I'm gonna zoom in a little bit. So this line, and this is the line I drew. You can see that it held perfectly. Not quite perfectly, but you can see that it held fairly well. So that line held fairly well, and then it bounced and we went back to the upside. That's extremely good for us. So we bounced and we went back to the upside. That's extremely good for us because that shows that the golden level held. That shows that there was still support for us to continue up to the upside. Now what we want to see is we have another resistance level here, right? Remember the moving average, because the candles are underneath, it's acting as resistance, holding us down. So now it's going back up, and we want to see if we're going to break through that resistance or come back down. So what something normal would be to test the resistance and get rejected and come back down. Now that's completely normal, and it's almost expected when you look at these candles. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. Out of the past 19 days, there's only been 5 red days. There's been 15 green days. So when you think about just in trends, right, that's out of 20 days, 15 of them being green, that's a high trend up. It would be normal for us to get a small pullback. So a small pullback starting out would take us to this level. Again, the markets are made up of people's decisions. Individual decisions on the daily basis could be vastly different, right? Like Tamika may have turkey bacon for breakfast. I may have pancakes. Keyshawn may have a fruit smoothie, right? Our individual decisions are very different. But overall, in the big picture, we all had breakfast. Do you see what I'm saying? So in the big picture, people do very similar things. So that's why you see trends in the market follow each other. right? You know, when one person gets scared and starts selling, another person gets scared and starts selling, another person gets scared, then everyone gets scared and it ends up looking like that. So it's just the trends in the market, right? So again, we all have different things for breakfast, but for the most part, we all had breakfast. So the same thing applies in the market with trends. So when we're going to trend, we've been trending up. A normal retracement trend would bring us back to $38,091. And that, again, would be a healthy correction because, again, for 20 days, 15 of them, we've been going up. So it's okay if we pull back a little bit. So if we pull back to this line, then that's super normal. Let's call it 38,000. Now, we're going to, in my opinion, we would pull back to this line and probably get a little bit of a bounce. But another thing that could happen is we pull back to this line and we go a little bit further down to our golden level of Fibonacci, which is 31,000. That is a key level, a very, very key level, because if we lose that, right, we held it right here. We held it up. We held it up at support, which is perfect. But if we lose that, then we have a chance to go to our next lowest level, which would put us around 20,000. So anyone that's followed me on Instagram, I've been saying for a long time, until we close above $42,000 consistently, 20,000 is still in play. So I was saying, you know, until we get over 42K, 20K is still in play. And it wasn't, you know, anything special I was doing. It was just looking at these charts and just taking the data that I saw here. So I saw that the moving average was about 42K. It was the level that we were ranging. So in my mind, I'm like, okay, well, we have to get above that level to keep going up, you know, because I knew that 42K was acting as resistance. I knew it was going to be harder for us to really break out of that level. So I said, we have to get above 42K. If we don't, then we could go back to 20K. And in my mind, that's still actually something that's quite possible. Again, because the biggest thing is this moving average. Once we get above it, then I'll start saying, oh, okay, we should be clear from going to 20K. And when I really will say that is once we get above it, and then we come back down to test it, we make sure it holds us as support, and we start moving back up. And then I'm 100% bullish again, and I think we go to all-time highs. Okay, so with that being said, the lower time frame targets for Bitcoin, if we stay right now, the price is, let me make this bigger so you can see the price, $43,891. Do we know for me in California Pacific time, the daily close for crypto is 5 p.m. So at 5 p.m., I want to see where these candles are. And at 5 p.m., if this candle is above 40, I'd say like 42,500, then that would be a good sign. It would be a way better sign if it was above this yellow line. So that would be a way better sign if it's above that yellow line. And if it's below the yellow line, then that's not what we want, because again, we want that breakout. So short time frame, we're waiting to see what happens there. If we get rejected, which I don't want to sound like a bearish person, because I want crypto always to go up. I have a good amount of crypto. I only want it to go up, trust me. But I'd rather give you a transparent, you know, detailed breakdown of what is possible. So until we successfully break up that, I think that we're going to get rejected and come back down. Again, that first level is 38,000. So that's the first level. If you don't own any crypto, I would suggest buying some, 38,000. If that 38,000 level doesn't hold, then I would suggest, you know, that it goes down a little bit further to 31,000, which would be this line here. And that's another time to buy a little bit more. So remember when I was saying, you know, if you have $100 and you're putting in $100 a month, you can break that $100 up into 4 payments of 25, just like you're paying a bill. Your first $25 goes in here. Your next $25 goes in here. And then you hold your last 50 to figure out, you know, what's going to happen next. Because again, if we don't hold it as support, we know that we could possibly go lower. And if we do hold it as support, we know that we could bounce back up. And it's okay if you buy a little bit higher, buy a little bit lower. This is called dollar cost averaging. So you're averaging into your position. You're not just saying, oh, I have $100. Let me throw in $100 right now, right? You don't want to throw in $100 right here, right now, because again, we could get rejected and go back down. And then you're going to be like, dang, why did I do that? I should have waited a little bit. So that's why you just spread out your entries. You don't need to put it all in at once. You break it down into, you know, however you want to do it. You can figure out your own plan. I'm just giving you a really basic guideline. So it looks like we're trying to break it back to 44K right now. So does anyone have any questions really quick on that stuff I just covered, right? So that was, again, the moving average, the Fibonacci tool, and then dictating where you buy from support and resistance. So when it's above, when the price is way up here, you want to wait for it to come to this moving average and buy. The same thing when the price is well, not same thing. When the price is up here at the moving average, you want to find out first if it's going to get rejected and come down, because then you can buy lower. Or if it does break out, you don't want to FOMO in up here. You want to wait for it to come down and retest the moving average, and then that's when you would get in. So that's on Bitcoin, and pretty much I use that same formula for whatever crypto I'm doing. So I'm going to do the same thing for Ethereum and Cardano. And then at the end, if you guys have a few that you want me to do, I can do that as well. But that's for that on Bitcoin. So again, we're at that decision-making point right now. So either we buy at the moving average on the retest. So moving average retest, if we break out, if crypto breaks out and we just go crazy from here and we go from 43,839, if we go right up to like 46 or something, then don't buy it right at 46. Wait for it to come back down and buy it at the moving average. So that's the first idea we have. The second idea is that we actually get rejected from this moving average because, again, we're getting suppressed down. So let's say we get rejected in resistance, then you're going to buy at the first one at 38K. That's a weird looking 3, but either way, 38K. And then if we still slide down, we have another entry at 31K. And if we break 31K, then we want to look for around 20-ish K. And around 20, I'm saying because it could be anywhere from, 20. I'm buying as soon as it gets under 25K is when I would first get my entry, but I would just keep putting money in all the way down. Buying Bitcoin around 20K, I think in the long run is going to serve you very, very well. Again, not financial advice, just giving you what I see here on the chart. All right, next thing we'll do is Ethereum. Ethereum has had a lot of talk, which is really good. Ethereum is a huge user base because most things that are built on Ethereum's blockchain, most other tokens are built on Ethereum's blockchain, right? So Ethereum is usually the main base layer, and then people go into Ethereum and build stuff off of it. So Ethereum is a huge project. The projects in my mind that you should be holding are Bitcoin, Ethereum, and Cardano, which is ADA. Those to me are the big 3. Just like if you had a basketball team, big 3, those are the big 3. Those are the ones I want to have the most in. It's okay to have some of the other coins that are a little bit cheaper that, maybe they'll have a big explosion, which would be cool. But for most of and I have a few of those, but for most of my money, I want to keep it in Bitcoin, Ethereum, and Cardano, because in the long run, it's a game of the long run. In the long run, 5 years, by constantly putting in money every month into those projects, I truly believe I'll be able to take care of myself and my family with minimal issues. And I say that, being very, very honest with you. So the same thing here we have for Ethereum, right? So we are above the moving average. We had that breakout right here, clear breakout. So we were trending up, went down, kind of hanging out, and then we had this big green candle. That was the breakout candle. So if I'm going to run a Fibonacci, I'm going to start it right there. So I run my Fibonacci really quick to the highest point. I look to see if we bounce at the 0.618 level. And you can see we held it at support, but it was shaky. There was a few days down there where it was trying to go lower, but luckily it did hold its support. So that's good to know. And I just want to check that level, right? So that's 2027. The next level is 2,476. All right, so now that I have those levels in my head, I'm gonna remove this. Remove that. And then I see here that we broke underneath the moving average. We came up, we retested it, we got rejected again. So the same thing I was saying, what could possibly happen with Bitcoin right now, right? Where it went up to the moving average, but it got rejected here. I'm saying that that is possible to happen on this Bitcoin chart, the same thing, that we go up to the moving average and we get rejected. I wouldn't be scared, I wouldn't be upset. It's normal, it's called price action, it's normal price action. A normal way charts work. So once you know that, and you can have these little tips and tricks, it might help you from FOMOing in or FOMOing out. If you think it's falling a little bit, you try to sell it really quick, it might not really be the time to do that. It's actually probably the time to buy more when it's falling a little bit. Okay, so Ethereum, we already went over moving averages, support, resistance, and whatnot for that. So let's just go ahead and get into the price predictions for Ethereum. Again, we'll start that trend down here, running to the top. All right, so 2013 would be probably your best entry that you're going to get. I honestly don't see it falling to that. I think it might fall to 24.66. And these aren't exact numbers. You know, I'm okay. This is called technical analysis. What I'm doing here, I'm okay at technical analysis, but I'm sure there's people out there far better than me that could give you down to the exact dollar and the exact cent. I'm not there yet. Stick with me. Maybe I'll get there one day. I hope to get there. I plan to get there. But so, you know, I would say 2466. But if it goes to 2500, I would still be buying that. You know what I mean? So, you know, sometimes it's not going to get exactly where you want it to go. But if you can get a generality, at least it'll save you some. So in this situation, I'm sorry, let me take a drink of water. Excuse me. So in this situation, this is what's currently going on with the scenario for Bitcoin. What we're trying to see if this same thing happens with Bitcoin, right? Because the breakout already happened for Ethereum. It's already above that 20-week moving average. Now, what do we want to do? The same thing we were saying. Let me draw a line that kind of just extends out the moving average. So I'm drawing this line here to extend out the yellow line. Okay, so now it looks like the yellow line's extended. So the same thing, we had the breakout, and now I want to see it not only break out, but come back down for that retest. So when it comes back down for that retest, that's where I can get in, because it's not guaranteed, right? Because if we look back at this Bitcoin chart, and I slide this over here, we can see that it never came back for a retest over here, right? After this was the last retest it had back in this spot, but then it just kind of tore off and went for a big upswing, which is possible for it to happen. And there's plans for that to happen too. But until that happens, you want to prepare yourself for what could possibly happen right now. And in my opinion, the same thing, the same idea. If we look at all these green candles, we can take this measuring tool, go from the bottom to the top here. So Ethereum is up almost 80%. Wow. From its bottom point here at 1757. And we can see the breakout, and I don't want to count these, but it looks like about 18 out of 20 days. So 18 out of 20 days, we had green candles. As a super normal thing would be for a pullback, right? The people buying get exhausted, buyers get exhausted. It's hard for the thing's price to just to fly up nonstop and keep flying up, because money starts drying up. As the price increases, other people that actually did get to buy down here start taking profits up here. So that's again what I mean when it's normal for the price to retrace a little bit. That's why it's called a Fibonacci retracement. So if we go up, we want to wait for this retest or retracement, and then we want to buy on the retest. Because if we buy on that retest and then we hold that as support, that's a super bullish sign that we're going to continue our movement to the upside. So again, that buy level is about 24.66, but I would say anything under 2,500 is a buy. And I would stick with that for Ethereum. Ethereum is going to continue to do very well in the long term. In the short term, crypto, you never know, because legislation, the things that are going on with the bill right now, different things could happen. But in the long term, I truly believe Ethereum will do very, very well. Another thing about Bitcoin and Ethereum is that they are considered currencies. So they are not regulated the same as other crypto assets. Some crypto assets are considered or deemed securities and not currencies, which means that they fall under a different bracket of regulations. To make sure, or not to make sure, but to help you avoid, buying an asset that is deemed a security that could later get regulated extensively, you can hedge that by not only, but mainly buying Bitcoin and Ethereum, because they've already been written off as currency. So they are regulated differently. I don't see that changing. I think it takes a lot to change that. I'm not actually the most knowledgeable on those topics. So if someone else is, you can let me know as well. But I do know that they're deemed currently as currencies and not securities, which makes a big difference when it comes to regulation. So again, the prices, anything under 2,500 is a buy. You want to wait for the pullback, and we hope that pullback comes. It's going to come eventually, whether it comes up here and comes down, or whether it's coming from right here and comes down, a pullback will come. That's just how, just like this run up, it does come down. Just like this run up, it comes down, run up, comes down, runs up, comes down, same thing, runs up, comes down, same thing. So we want to buy that come down, that retracement. So anything 2,500 or less. All right, the next one, Cardano. Cardano is one of my favorite charts here. All these purple lines are considered support and resistance lines. And you can see by like right here, it held it up right there for support, it held these up for support, 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 support. So you can see there's a massive amount of support at the $1.06 level. So that means most people probably bought Cardano around $1. So most people bought Cardano around $1. And the reason why it usually, or not usually, but it hasn't recently, let me move some of the stuff out of the way. The reason why it hasn't recently probably fallen under that dollar is because people bought it at $1 and it's ran up. And if they didn't take any profits at the top, then they don't want to sell it when it's only at like $1.10 or $1.20. They just want to hold on to it and buy probably more at that level. So I'm going to remove all these drawings. Perfect. So now we only see the moving average for Cardano. Same situation as we said before, right? It doesn't matter what asset. So you can see it says ADA up here. It doesn't matter what asset we're looking at. The chart is technical analysis is the same, no matter what asset. It went up, comes down, it retests, it goes back up. It comes down, it goes under, it retests, it gets rejected, it comes back up. So Cardano right now is just passing its retest. So again, we're going to extend this line out right here, extend this out. All right, so now you can see clearly it's sitting right on that retest. So if we go down to a smaller time frame, let's go to 4 hours. On this 4-hour chart, you can see the retest already is happening right now. So it broke out, because remember this yellow line extended over. So it broke out. Let me extend this first. Boom. Broke out of that line, and now it's coming back down. It's testing this at support. I would wait for I really like Cardano, but I was buying Cardano when it was about 50 cents, or I'm sorry, 50% lower than the current price it is right now. So it's hard for me to say, oh, I'm going to buy right here. Like, that's not what I'm going to do. But when it's underneath this moving average, I think it's a good time to buy like down here. So for Cardano, I would wait for the pullback. Let's run the Fibonacci retracement as we always do. And we'll go back to the daily chart. Remember, you always want to be drawing all your data points on the daily chart, because that gives you more information. It's more solid, it's more secure. It gives you a better idea of what's currently happening. So let's go down, and we're going to run this to the top. And now I'm going to make this a little bit higher so you can see. Left. All right, so we started at the bottom of our trend, right? We went to the top of our trend. I made this trend a little bit smaller because this is just the more recent data. A great entry for Cardano would be $1.22. I actually call it $1.20 because Cardano really likes the $1.20. And if you've been watching as long as I have, you would just know that off the top of your head. So $1.20 is a great entry point for Cardano for right now. And if we're going to look for it to get lower than that, then I would say $1.05 to $1.14. So I'll put in here $1.14 and $1.05. So imagine, just like we were saying, let's say you had $1,000 to put in. I would maybe put in, 250 at 120, 250 at 114, and then 500 at 105. And it's okay if that 105 never actually comes. At least you still got in down here. And if you got in down here and then we do have a run up, then we come back to the charts later and we do the same thing with the Fibonacci retracement and we see where our entries would be for that. So again, $1.20, $1.14, and $1.05 for Cardano. For Ethereum, it was anything under 2,500. And for Bitcoin, it's more wait and see for Bitcoin, in my opinion. Again, because we're at that moving average, we're right at that line. We need to see if we're going to break out. And if we do, we buy it on the retest. And if we get rejected, like here, if we get rejected, you buy it when it comes back down. And again, that was 38K. Now, again, it might not be perfectly 38K. Maybe it's, 38,400. Again, you got to take what it gives you. I'm sure that a lot of people here on the call were like, dang, I wish I would have bought it here, right? Everyone, same thing for me. I did buy a little bit there, but I wish I would have bought more there. So the same thing, it's human nature. So I completely understand that. So that's really it for the charting. I wasn't going to show you guys how to do some of the stuff. If you come into some of the other Zooms we have, I actually sit there right with you. I show you how to set the lines. I show you how to do everything. So make sure you check back in for more Zooms and when we can go over those type of things. But for now, just kind of let you know what's going on with the market. Why is these things happening? Where are we going to look to get entries? And again, the things that are going on with the market right now are EIP 1559 for Ethereum and that legislative bill for Bitcoin. And we can imagine, right? If that infrastructure bill passes with the amendments as they currently were written, then we could probably see a pullback in Bitcoin because there is a lot of unfriendly language in there. So that would make perfect sense, right? With the news of that, as well as being in all of this resistance level, as well as pumping 15 out of the last 20 days. And let's check the stochastics RSI really quick. Stochastics, so this tells us that people are still in buy zone. When the stochastics is up top over, shoot. When it's oversold out of the blue range, that means it's probably going to drop a little bit. When it's in the blue range, it means it still has room for people to buy. And when it's underneath the blue range, it means that it's undersold and there's probably going to be an influx of buyers coming in soon. So the stochastics is showing that there's still some buyers. So there's still room for it to break out here. So we're just going to watch and see and wait to find out. And that's my opinion on that. All right, so let me find this website I wanted to share with you. Ultrasound Money, I believe it's called. Oh, yep, Ultrasound Money. So this is the EIP 1559, also known as the London hard fork for Ethereum. And this website shows you how much Ethereum has been burned so far. So what EIP 1559 is, it's a protocol that they implemented into Ethereum to help make Ethereum deflationary. A lot of people get a little bit confused because it wasn't introduced to lower the gas fees. It was introduced to make a stable playing field for the gas fees. So meaning that you get charged more of a stable rate, 42 to 48 WEI, W-E-I, WEI. So you get charged 48 to 42 WEI. And WEI is basically a penny to a dollar. So the way you have a $1 bill and it's broken down into pennies, that's the same thing as you have one Ethereum and it's broken down into WEI, W-E-I. Same thing as you have one Bitcoin, it's broken down into Satoshis. Same thing. So if you don't know that, at least you got to pick that up from this call, if nothing else. So one Ethereum and its smaller version of Ethereum is WEI. One Bitcoin, smaller version of Bitcoin is Satoshis. $1, smaller version of a dollar is pennies, right? So it's like the lowest denominational value of that asset. Okay, so far with the burn EIP 1559, every time there's a transaction on the Ethereum network, let's say for instance, I wanted to send NRC. Let's say I wanted to send NRC. What do I have here? This is Matic. Let me go to Ethereum. Say I wanted to send NRC, 0.01 Ethereum. So I go here, I go to send. Let's say this is their address. So I put in their address and I have my Ethereum balance here and I want to send 0.01 Ethereum, $30. So it's going to charge me some gas here. So say I wanted to get it there very fast. So I do the fast gas. So in this fast gas, it shows that I'm going to get charged 0.00107 Ethereum. So I'm getting charged Ethereum as the transaction fee for me to send Ethereum to NRC or to whatever. Whenever you're interacting with the smart contract, you have to pay what is called a gas fee. That gas fee is paid to the miners, and the miners are the people that are completing your transaction behind the scenes, right? So when I send this transaction, it goes into the Ethereum node. That goes into the validators all across the globe. They validate, because this is proof of work, they validate my transaction to make sure that I have enough Ethereum in there, that I'm not a malicious actor, that I'm not actually trying to pull some type of scam or some coding hack. They validate my transaction. So they get paid some of this gas fee down here for validating my transaction. That's why miners mine. That's the reason they validate our transactions, because they're getting paid some of these fees. So originally they were getting a lot more of these fees, but with the I really messed that up. Implementation, there we go, of EIP 1559. Now, instead of the miners getting this total amount, they're only getting a small percentage of this amount, and the rest is being burned here. So the rest goes to a burn address. A burn address meaning that, so if let's say my transaction fee, to make it easy, make this easy, let's say my transaction fee cost me 1 Ethereum, so I had to spend 1 Ethereum in gas. So now they'll take that 1 Ethereum, and then instead of normally giving, 80% to the miner and 20% to the network, now they're going to give, let's say, 30% to the miner and burn the rest of that Ethereum. Now, why would they do that? They do that because that will change Ethereum's total supply. So when we click on Ethereum here and we see this is Ethereum's total circulating supply, that supply amount will go down because now every time there's a transaction that happens, the Ethereum goes here and gets burned and lost forever. So again, why would they do that? Well, simple supply and demand. As there is less supply of Ethereum and the demand goes higher, then the price will increase. So I think Keyshawn said, what is your recommendation for purchasing a fraction of ETH or Bitcoin? Like how much is a sensible investment? Great question, but that really depends on you. Like you can see here in this wallet, now I have many different wallets and I keep most of my assets in a cold storage wallet because it's much more secure. But there's $118 in here, right? So like I buy NFTs on OpenSea, so I have to keep some Ethereum in here to buy NFTs. But whatever you can afford, right? You just want to. The goal is to accumulate more and more. The goal for me is not to have more of this. It's not to have a higher USD value. The goal for me is to have a higher Ethereum value. So I want this 0.03 to go up to 0.5, and then to 0.8, and then to 0.9. Right? I want to gain more Ethereum. If my same amount here right now it's worth 118, but if it goes up, let's say Ethereum goes up, and now the same amount 0.03 is worth, let's say $500. That's cool, but in the long run, I'm not gaining as I need to be. I want to be adding more Ethereum because in my mind, I know the USD value is going to go up. Right? When I pull this Ethereum chart up, I know that, yeah, we might have a small pullback, but then we're going to go up even higher. And I think we're going to go up even higher. And let me see, are we at 10,000 yet? Nope. I think we're going to go up even higher, right? So obviously 0.03 of 10, let me pull up this calculator here. So if I have this calculator, let's say Ethereum goes to $10,000. And now remember in my MetaMask, it shows that I have 0.03. So if we pull up this calculator again, so if I multiply that by 0.03, then now that 0.303 will be worth $300, right? Compared to if I have Ethereum is at $3,000 right now, and I times that by 0.03, that gives me about $90, right? So I'm not worried about the USD value. What I want to get out of this is having more than 0.03, right? Because now let's say instead of 0.03, I can get up to 0.0, get up to 0.9. So, $10,000. And we're going to times that by, let's say I can get up to 0.9 Ethereum. So 900. The thing for me is if you're holding for the long term and that's what I suggest everyone doing, holding all these assets for like 3 to 5 years. If you're holding for the long term, you just want to have more Ethereum. So you want to be buying, you want to buy as much as you can, as often as you can, which you can afford, right? I'm not saying go sell your car and start buying Ethereum, but I'm saying instead of going to the bar or, I don't know, we have different age ranges and different types of people in here, but instead of spending $20 at Chick-fil-A like that, I used to go hard at Chick-fil-A. I really like Chick-fil-A, man. Let me not do that. Let me take this $20 and buy Ethereum this Sunday. Or, instead of going to, and you have extra money. I've been really broke before. But I still had, a random $10 here, $20 there that I somehow found a way to use for my leisure. I wasn't earning my leisure. I was just being leisurely. I was just out here just buying things when I wanted to buy them. Well, my mindset has shifted dramatically from that to now I try not to do any of those things, cut back bad habits, cut back buying $2.50 sodas at 7-Eleven, cut back, just buying unnecessary things. And so what's a good sizable investment is literally whatever you can afford. If you have $100 that you normally spend on something, not saying that you shouldn't, still enjoy life, right? If you want to go get some ice cream, go get some ice cream. I'm not saying don't enjoy life, but if you have money that you know could be spent wiser, then maybe it's not a bad idea to, instead of spending in that $20 on, you know, XYZ, you just buy a little bit of Ethereum. So in your head, every time you go to buy something little that is kind of minuscule, that is not a necessity, you just try to stop and think twice, like, oh, well, I could buy this, or I could buy a little more Ethereum. And then that way, you know, even if you're adding 0.0001 Ethereum, and then the next time you buy, you know, instead of going to the movies, you watch a DVD at home, now you get to buy 0.00, you know, 3 Ethereum. And then now the next time, you know, you save money instead of going out to dinner, you know, now you get to buy 0.005 Ethereum. And now let's say something bigger happened where, you know, let's say you paid off your car, right? And normally you have to pay $200 a month for your car. Well, now you have an extra $200 a month that you're not paying for your car. So you buy $100 worth of Ethereum, and now you got, you know, 0.010. And now we add all those up, right? And now you have a total of whatever the total would be. Let's do it, 8, 9, so 9 there, 1 here. So now you have a total of 0.019 Ethereum. So now that's what I think you should be doing. Like, you're just constantly trying to accumulate your Ethereum. So that way you have, you know, your point. So now you already had your 0.03, and now you add your 0.19, right? And now you're almost at 0.05 Ethereum, which is awesome. Now let's say you get your taxes back. Okay, now normally I would go on vacation or something with those taxes. Again, enjoy your life. Do what you want to do, right? Do what you want to do. For me, I did what I wanted to do for far too long, and now I'm playing catch up. So now I have to be more aware of those things and more aware of being like, hey, you know, don't go do this. Like, don't take this trip. Yeah, I might really want to, but if I want to grow these numbers, right? If I want to grow this number in here, I slow down on doing those things and I buy some more Ethereum. So that way in a few years, then I'll be able to do those things no problem. So, you know, I don't have the best answer of like what's a great sizable investment, but what I would say is like what I tell my mom, this is the example I give. My mom is not a rich woman. She's a teacher. So, you know, teacher salaries aren't always the greatest. And so I tell her to put in $100 a month. So I literally the same strategy that I told you guys earlier. She has $100. I tell her to break it up into 4 different payments. And then I usually text her. Now, I don't know if she's going through with it or not. You know, you can lead people to water, but you can't make them drink it. So I hope she is. I know she has bought some before. I know she has a little bit, but I don't know if she's sticking to her plan of, you know, 4 payments. You divide your $100 up into $25 payments. And then I literally text her. When I'm buying, I text her, hey, mom, you should buy now. Hey, mom, you should buy now. Hey, mom, you should buy now. And then that's how I tell her to get in. So, you know, again, Keyshawn, whatever you can afford is what I suggest. Again, you know, I could be completely wrong about crypto. It could go to $0. You know, that's why this is not financial advice, because I'm not, you know, a licensed financial advisor. I can only take what I've been learning over the past, you know, 3 to 4 years about crypto and try to help you out with what I've seen previously. But again, it's not financial advice. So I just gotta throw that out there. But really good question though. So thank you for that. So again, the biggest thing for Ethereum is that it's being currently burned, right? EIP 1559 is burning your Ethereum transaction money. So the money that you would normally be spending right here for this gas, instead of it just going to the miners, now most of it is going here to the burn bin where it will be burned. And you can see already 15,196 Ethereum have been burned. And let's pull up the calculator again. If we have 15,000, let's just call it 16 to make it easy. 16,000 times Ethereum's price is about 3,000 right now. So $48 million has already been burned in Ethereum. And this just took into effect, right? If we go, it's been in effect for about 7 days. I think today is maybe the 7th day. Not even, I don't think. So it's been in effect less than a week, 100% less than 2 weeks. And then, so in less than a week, about $48 million were burned in Ethereum. So again, why is that important? Because we go back here, we see Ethereum circulating supply. As that supply goes lower from being burned, the demand will go higher, right? As the price of Ethereum increases, as crypto gets more popular, Ethereum's price will increase, but there'll be less supply and more demand, thus causing the value of Ethereum to increase. So that's why EIP 1559 was a big deal. Just so you know, right now, as of today, it is not deflationary yet because new Ethereum is still being mined. So that's why I said it's EIP 1559 is working towards making Ethereum deflationary, but it is not deflationary yet. So do take that into mind that everything I'm saying is that's what they're working towards. It hasn't fully been completed yet. All right, I hope you guys got a pretty good understanding of that. But again, you know, ask questions. That's why I'm here. Take advantage of someone that knows a little bit about the stuff and ask while you can. Because what I've seen for the long time in the crypto space is most people that have made money kind of become arrogant about it or jerkish about it, and they don't want to share the information and they don't want to let people know. And that's exactly what I'm trying to cut out here. So please feel free to you know, speak up and ask the question. Okay, the only other thing that I really had that I wanted to mention to you guys about was just because the Chainlink Smart Contract Summit just happened. A lot of people don't know, you know, about Chainlink or what Chainlink is. So Chainlink is a Oracle protocol. So when you have smart contracts that have data that need to be inserted into the smart contract, that data has to be pulled from somewhere, right? You can't just enter the data because data is constantly changing. That's the cool thing about smart contracts. You can have data that's constantly changing and you can put it into the smart contract and still execute the smart contract from that data. So where do these places get their data from? They get it from an Oracle protocol. And what's the biggest Oracle protocol? That would be Chainlink. So if I have a smart contract that says, what's something that we probably all know about? Let's say the Super Bowl for football. So I'm originally from Delaware, which is closest to Philadelphia. So let's say I bet that the Philadelphia Eagles will win the next Super Bowl. And let's say, you know, everybody in here picks a team. Let's say Tamika picks the Oakland Raiders, Yob picks the Los Angeles Rams, Jordan picks the Atlanta Falcons, you know, everyone picks their team. Now in that smart contract, we can write that it automatically will withdraw Ethereum from our addresses here, right? So we'll all put in our address, this address that you get here, I'm gonna put it up here. So that address, right? That's your receiving address. That's your wallet address. So we can all write in the smart contract, we all put in our wallet addresses, we all deposit, let's say, you know, for this bet that we're gonna do, let's say the bet is for, you know, 0.3 Ethereum, 0.03 Ethereum. So we all put in 0.03. We send it to the smart contract to be held in an escrow. And then we let the smart contract play out, right? If one of our teams wins the Super Bowl, then the smart contract will automatically execute the what we've written in the code. It'll automatically execute that and it'll send the winner to the address. So if I won, then it would just automatically take all of our Ethereum that we had all put in and send it to my address. We wouldn't have to do anything. It's one time. We write the smart contract and it sends it out once it's completed and executed, and that's it. It runs itself. It's similar to a DAO, if you know what a DAO is. Okay, so how does that happen? How do they have that information? How does this, you know, computer code know that the Eagles won the Super Bowl or the Atlanta Hawks won the Super Bowl or Atlanta Falcons won the Super Bowl? How do they know that? Well, they get that information from Oracle protocols. And again, what's the biggest Oracle protocol? It is Chainlink. So Chainlink is almost weaved its way in or ingrained itself in to other big projects, because now all those big projects rely on oracles. Again, the biggest one being Chainlink. So the one that's most used is Chainlink. Chainlink just signed a deal with Amazon as well as Google, and Chainlink is also the biggest Oracle protocol for Ethereum. So we have 11,000, you can see on my screen, there's 11,185 cryptos, right? These are all the different cryptocurrencies. There's a bunch of different cryptocurrencies that are out there. So out of all these cryptocurrencies, now I could be a little off here with the dates because I looked this up quite a while ago, but it's still pretty relevant. 80% of all cryptos that are created on the Ethereum blockchain. So let's say that number has changed a little bit, and let's say it's more like 65, 70, which is still a very large number, right? So let's say 70% of all the cryptos created are created on the Ethereum blockchain. Well, if those protocols need data or oracles, they're most likely going to use Chainlink as Ethereum uses Chainlink. So as Ethereum grows, the need for Chainlink will grow, as well as, like I said, they're integrated with Google as well as Amazon, and they're always working on something new. I suggest Googling about their Smart Contract Summit, and you can find a little bit more information about it. But Chainlink is a super solid project. Their founder is this guy named Sergey. I've listened and followed him for probably 6 to 9 months. He's a super smart guy, knows what he's talking about. Sergey Nazarov, co-founder, CEO at Chainlink Labs. So I really like the founder. I really like what they're all about. I realized how integrated they were with other projects. This is a project that everyone wants to do this. They want to come on here. They want to look at these projects, and then they do this. They click on this price. They want to see the lowest price they can get something for, and then that's what they buy. Right? They buy Shiba Inu. They buy BitTorrent. These are the price. The price is not the price, right? So just because this is the price, that doesn't really dictate what's going to happen. What matters is the market cap and the total supply. Because if you take the market cap and you divide it by the total supply, then that will give you the price. So if you reverse engineer that and you guess the market cap. So let's say Shiba Inu's market cap right now is almost $3 billion. So at a $3 billion market cap, the price of Shibu is, thousands, millions of a penny or whatever. So if we increase this market cap, so in our minds, we're saying, hey, Shiba Inu comes out with news that, let's say, Bitcoin, let's say every single person that we follow and we think is important says Shiba Inu is the way. So let's say Shiba Inu's market cap goes up from 3 billion to, let's say, 10 billion. And then we divide 10 billion divided by the circulating supply, and then that will give us a new price. So you can find out. So when you hear people say, oh, Shiba Inu is going to hit $1, you can see how realistic that would be by putting in a guess or an estimated market cap. So let's actually do it. So let's say that Shiba Inu's market cap is going to go to $10 billion. So $10 billion. And then you have to divide that market cap by this number right here, which is the total supply, which is 1, 2, 3, 4. So 394 trillion, which is absolutely insane. But for this example, we're going to do it. So that's 394 trillion. That would give us the market cap of $2.50 as a price, I believe. I could have been doing this wrong, but I'm pretty sure that's, yes. So that would give us $2.50. So this would have to go up to, was it 10, what did we put in, $10 billion? So what's the likelihood of that happening? It's probably not likely for that to happen. Now it could happen, but this is how you find out, you reverse engineer to see if what people are saying could actually possibly happen. So I highly doubt Shiba Inu will go to $1. It's much harder for a project to grow in size with their market cap, doubling or tripling or quadrupling when it doesn't have a real world use case. There's no real world use case for it. So that's what I mean when, you can buy this because it's cheap and it could go up a little bit, but in reality, the fact of it actually getting to $1 or something like that is not realistic. It would make more sense when you look at these projects to find something that has a low circulating supply, like Yearn Finance. It only has 36,000 that'll ever be made. And so when you now have this market cap divided by 36,000, it gives you a price of 32,000. So it makes more sense to find something with a lower circulating supply. And if you can find something with that, well, first it still has to be a good coin, obviously. But if you can find something that's a good coin with a lower circulating supply and a lower market cap, then that'll give you room to run, and that'll give you room to find these higher ones. I kind of got distracted with that though, because I didn't want to talk about anything other than the mainstays in this. Again, the mainstays, Bitcoin, Ethereum, and Cardano. And then some other ones that are good, something like Chainlink. If I look at my watch list here, the other ones I could advise you to get that could possibly be good in the long run. Again, do your own research on this. This is not me telling you to go buy these at all. So let me see, we have Aave. So AAVE. Aave is a decentralized protocol in the DeFi sector. It's going to be really big. They already have big institutions that are going to be coming into it. It's a good play. VET. So for my people that like smaller coins, for the people that don't care what I'm talking about, they want it to be, a couple cents or lower. VET is probably going to be your best bet. It is a supply chain protocol, VET, VET. So that's another one. If you are thinking about banking plays, I don't personally like this for the long term, but if you are into the banking plays, XRP, not a bad one. And one that I do think will stand on its own in the long run is Luna, Luna. Luna, its own blockchain. They are developing so much over there. Luna, I think, in the long run will be very successful. But again, these are afterthoughts, right? So let me put a big X in here. These are afterthoughts. You buy these after you have Bitcoin, Ethereum, and Cardano. Or it doesn't have, I like Cardano, so that's why I put it in there all the time. It doesn't have to be Cardano, but it's Bitcoin and Ethereum for sure. You buy those coins, all the ones that I just mentioned here, Luna, XRP, V, and Aave, you want to be buying those after you already bought Bitcoin and Ethereum, right? So you should always have more Bitcoin and Ethereum than anything else in your portfolio. At least that's how I look at it. I've been buying more Bitcoin because I didn't have as much as I wanted to. So I've been buying Bitcoin while I was underneath here, right? It was under that moving average. And like I said, anytime for me, it's under this moving average, it's a buy. Even if you buy the top of it, it's under the moving average. So that's for me, that's what I like. And yeah, so that's about it. That's all the stuff I wanted to cover as far as, you know, the price action of what's currently going to happen. Remember, Bitcoin, we're waiting for that breakout point. We're trying to figure out what's going to happen here. And then also Ethereum is under 2,500, and Cardano, look for it to pull back to about $1.20. The best buy would be about $1.05, $1.06. So if there's no questions, then I'll probably just go ahead and wind it down and end the call here. If there are some questions, feel more than welcome to either type it in the chat or unmute yourself and you can ask them. But those are the main things I wanted to go over, and I appreciate you guys tuning in with me. So now is the time to speak if you would like to.
Hey, Justin, I got a question. This is Tamika.
Hey, Tamika. Yeah, what's up?
So with this infrastructure bill possibly getting passed, or I don't know if it's getting passed, but just mention of it, do you think there's any chance that could cause a lot of fear in the market and we could get some better buying opportunities?
Yep, that's exactly what I was saying, right? Because we're also at these resistance points, right? We're already facing resistance. So that's already one hurdle we have to jump over. But we also have the news that's going to be coming out relatively soon. So with those two things combined, that's why I've been saying I think we're going to get a pullback to about at least 38K. Now we could go lower than that. And remember, that's what I was saying. If we do go lower, then you just check back to the level. So it was 38K, and then it was down to 36, and then down to 30, then down to 22, I think were the levels. So yes, I 100% agree with what you're saying. Once we get better understanding of the infrastructure bill and what the actual details of it are going to be, if they come out and they're not too friendly for us as crypto, then that could be another reason that, combined with already being at that resistance point, that we do get a better buying opportunity a little bit lower.
Okay. I have one more question to kind of add on to that.
You can take up as much time as you need. So yeah, whatever you need.
So I kind of want to take a little bit of profit, because I'm not going to lie, I'm a little scared that, I might miss a chance. Well, at least for the short term, I don't know what's going to happen with this bill. Do you think that would be a good idea to take a little profit now, or just kind of wait it out?
So it's never a bad day if you're taking profit, right? It's like anytime you're locking it in, like, hey, I got this locked in. I wouldn't say that's a bad day. Now I wouldn't suggest selling everything. I don't know your personal situation or whatever, but yeah, if you want to take a little bit of profit, then I think that's healthy. That's normal. You should be taking a little bit of profit as you go up, right? Because that way, you're not going to give it back. You're not going to lose it. But what I suggest though, usually when I take profit, I try to, like, let's say I have something like, I don't know, VeChain or whatever. Let's say VeChain goes up 50%, and let's say I put in $100 and now my $100 turned into 200. Well, I can take out my original 100 and I'll do one of two things. I'll either move it over to Bitcoin, because I'm keeping Bitcoin for the long term. Like, I'm not trying to get in and out of it too much. I'm trying to accumulate more. Just like we showed with that ETH example, where it's like, okay, I only have, like, for this example, in this wallet, I only have 0.03. Like, I don't care that the 0.03 is only worth $118. I want the 0.03 to be higher. I want that to go to 0.6 to, you know, 0.12 or to 1.2 and so on and so forth. So I usually take profit into Bitcoin, meaning that I don't take profit, like I don't take out $100 and go spend it. I try to take it out and go buy more Bitcoin because I need my long-term, my goal is to have more accumulation of it. But at the same time, it's not a bad idea if you are up, take some out. There's a few different ways you can do it that I suggest, that you just take it out and you swap it to a stable coin. So let's say you bought some Bitcoin down here and then it went up. And let's say, you know, you whatever double, tripled your money. Now you take some of it out and you put it into a stable coin. You wait for Bitcoin to fall back down. And now with that same money, your profits, you buy back in here. So that way you're accumulating more Bitcoin for free, essentially. You're using your gains to buy more Bitcoin at a lower level. So that's a really good strategy for most people. A lot of the higher level people that I watch and I listen to, that's exactly what they do. They make profits in other coins and then they switch it into a stable coin. They wait for a drop in the market and then they buy back in on that drop. So, you know, a perfect example, again, like let's say you put in $100, that $100 now has turned into 150. Let's say you take out the $50 that you're up profit, and now when it drops down lower, you buy more Bitcoins because it's an accumulation game. If you own, you know, 0.01 Bitcoin, and that 0.01 Bitcoin went from being worth 100 to being worth 400, right? So you still have 0.04. You still have 0.04 Bitcoin. That number hasn't changed, but the value of it changes. So yeah, if you have 0.04 Bitcoin and it goes from 100 to 400, now let's say you take out 300 of it, right? And now when Bitcoin drops back a little bit lower, with that $300, you buy back in. And now you, instead of having 0.04 Bitcoin, you now have 0.06 Bitcoin, right? So in my opinion, you want to be accumulating more Bitcoin. You want to accumulate, it's not the dollar value. You know, you don't want to own, like let's say to make it easy, let's say you have one Bitcoin and that one Bitcoin is worth $100. And now the price of Bitcoin goes up and that one Bitcoin is now worth $500. You still have one Bitcoin, it's just worth $500. But you don't necessarily want it to be $500. You want the one Bitcoin to turn into two Bitcoins. So instead, so now you have the 100, right? It went from 1 to 5, so you have $400 profit. So now you put that $400 of profit into a stable coin. So now you have $400 sitting over here waiting, and you're waiting, and you're waiting. Now the price drops, and now you increase your point, you know, let's say whatever you are, now you increase your one Bitcoin because now you have $400 that you can buy back in and the price drops. So now this $400, let's say that $400 buys you 2 Bitcoin. So now you have a total of 3 total Bitcoin because this is a long-term game. Because now when Bitcoin goes to $1 million and you have 3 of them, now you have $3 million. You don't have one Bitcoin worth $1 million. Does that help at all?
No, that helps a lot. Thank you so much. I'm going to try that strategy. Thank you again.
Yeah, no problem at all. That's like when you're playing the long game, that's like the next level chess way to play, right? It's not about, I learned that the hard way because I would like you first example, like I would take money out and be like, okay, well, I'm going to use some of my investment money that I profited on, and I'm going to take that money out. And now I can go on a trip to Punta Cana, or I can go Punta Cana, however you say it. And now I can go to the movies and I can go fix my car and I can go do whatever. But that I was thinking the completely wrong way with that. I want the name of the game is to increase the asset. So I don't want to just have one Bitcoin worth, you know, $100 and then that 100 goes to 1,000. Like I said, that's cool. Like, yeah, that's cool. But what I want to do is have more than one Bitcoin, because in the long run, the Bitcoin's going to $1 million minimum. And don't quote me on that. Actually, quote me on that. Bitcoin's going to $1 million. It might take a while to get there, but it's going to get there, right? So, you know, I don't want to just have one Bitcoin and then when it does go to $1 million, I'm like, dang, I got $1 million now for my one. I want to find a way that I can get, you know, 2, 3, 4, 5 Bitcoin, and now I'm able to do that all from my original $100 purchase. Because if I originally, and let me just move this over here so I can have some new space here. So if I originally put in the 100 and that one, and it got me 1 Bitcoin. And now that 100 turns to 1,000, and I take out the 900 in profit, and now I'm chilling, right? I'm chilling, and let's say Bitcoin drops all the way back down, and it drops to this same price. The same price as when I bought it for 1 for 100. Well, now I have this much to buy, so that means it's going to get me 9. So as where 100 got me 1, 900 will get me 9 because I waited for it to fall back to that price. So now I have a total of 10. And now there's going to be times where it's way down, and you're like, dang, is this really going to $1 million? This guy thinks that? Like, there's no way. But I'm telling you, when it goes up to 1 million, you're going to be very happy that you used this strategy and you used your gains to buy more Bitcoin. Because now when it's up to high, you increase your Bitcoin amount. So now the USD amount will already be more because we know in our heads that Bitcoin's already going to go higher. So we take advantage. And let me show you on the chart of exactly what I mean. So maybe it'll be a little bit more clear. Let me see if I can find. Okay, this is perfect. All right, so let's say over here, right? So you bought Bitcoin over here, and the price was 30,000. So let's say you bought 1 whole Bitcoin for $30,000, and now the price went from 30,000 all the way up here to 60,000. So now you still have 1 Bitcoin, but it's worth double the money. So now you sell 30,000 of it, right? You sell half because it went from 30 to 60. So now you have 30 in your stable coin, 30,000 in your stable coin. And now when the price falls back to the same price that you bought over here, you take that stable coin money and you buy another one right over here. So now you have 2 Bitcoin. And now, just like what's happening right now, now as the price starts going back up, and I'm sorry that this looks so messy, but now as the price goes back up, right, over to that 60,000 level again, now you have 2 Bitcoin at this point, when before you have 2 Bitcoin, both worth 60,000, when before you had 1 Bitcoin, you know, you had 1 Bitcoin worth 60,000. So that's why you take profit up here, you take it out into the stable. When the price falls, you buy back in at that same level. So now you're increasing your Bitcoin holdings because you know the price of Bitcoin is going back up. So you don't have to worry about that as much. What you're really worried about is accumulating Bitcoin. So again, I hope that helps.
Yeah, that helped a lot. Thank you so much. I love that strategy, and I'm definitely going to try it.
Cool.
I need to keep money in the crypto ecosystem, I guess.
Exactly. And the cool thing is, so let's say to take that same example a little bit further, if you have that 30,000, right, and it's in a stable coin, it's not going to sit there and do nothing. You're actually going to earn interest on it. There's different platforms that I can show you and that you'll be able to, you'll find on your own as well, that you'll be able to earn interest on that. So when you do take your profits, you want to take it into a stable coin and then stake your stable coin. So then you're earning interest on it. So now the whole time while you're waiting for that price to fall, back to your original point so you can double and now have 2 Bitcoin, you're earning interest. So let's say you're earning, just 5%. So even if it takes a long time, even if it takes months on months on months, on that $30,000, you're still getting 5%. You're earning that interest daily. So you're getting that interest and you're just patiently waiting. And when it falls back to that level, you strike. Now you doubled your Bitcoin holdings and you just wait again and you rinse and repeat. And when it goes back up, when it gets to that top point, you take profit out, you put the profit back into a stable coin, you let that stable coin earn interest until it falls back to your original entry. Now you got 3 Bitcoin, and you just keep doing it until eventually the price is going to get so high. Eventually the price is going to get so high to where the point is, it's not going to fall back to your original entry. So while these moves are still happening and while we're still going up 30,000 and coming back 30,000, we want to take advantage of this to gain our Bitcoin holdings, because eventually the price is going to go up, and it's not going to fall back to our original entry. We'll still take profits and we'll still do the same strategy. But for right now, we have time to, turn 1 Bitcoin into 2 by literally just being patient and waiting. By buying 1 today, or even as Keyshawn said earlier, the same strategy. I just did 1 Bitcoin because that's easy terminology, but the same thing goes. If you have, 0.1 Bitcoin, then the price of that 0.1 Bitcoin is $50. Well, as the value of crypto goes up, right? If you bought it, let's say the price that you bought Bitcoin at, let's say you bought Bitcoin at 30,000, the price goes up to 60,000. You take out, so now that 0.1 instead of worth 50, it's worth 100. So you take out the $50, you put it into a stable coin, you earn interest. When the price comes back down to 30,000 again, you take the $50 from your interest and you put it back into Bitcoin, and now you have 0.2. So it doesn't matter the amount that you have, it's just amount that you're trying to accumulate more. So that's the name of the game.
Okay, I'm gonna do that. Thank you, Justin. I appreciate it.
Yeah, no problem. And you can reach out to me on Instagram or whatever anytime. And whenever I have time, I'll try to get to you and help you best I can.
Okay.
All right. Did we have any other questions on stuff like that, or something similar to stuff like that? I see y'all said, do you still like DAI? Yep. So DAI. So there was a lot of news going on with Tether. So if we just do Tether, which is USDT, this was the most popular stable coin by volume. So by volume meaning, who used it the most? It was Tether. So this was most popular, but there's been a lot of news about Tether where it's kind of getting dicey. And, basically what happened was they said that they had X amount of dollars in the reserve, and they did not have X amount of dollars in the reserve. And so that caused a red flag, and that caused a lot of, questions about Tether. So I recently have been using, instead of Tether, I've been using the stablecoin DAI, and then also I've been using the USDC coin. So those are the ones that I've been using more. So you can do a little bit of research and find which ones you like the most and what do you think will work best for you. But for me, those are the two that I've been using. And when you're on different platforms, you get different interest rates. So that's another big thing. Different platforms will give you different interest rates on, different stable coins. So it's something you want to take into consideration. Okay, did anyone else have any questions or want to unmute themselves?
Thank you, Justin. I'm still sitting here looking at your chart about how to double your quantity of like Bitcoin. I've never seen it explained like that before. I thought we were supposed to just buy and hold and literally just hold it and wait. Wow. Thank you.
Yeah, no problem. Well, that is the strategy, right? That revolves, the buy and hold strategy limits the amount that you can F it up. And I try not to cuss anymore, but the buy and hold strategy limits how much you can mess something up, because using that strategy, you can mess up. That's the perfect way. That's saying that you did it perfectly, right? Now, maybe you don't do it perfectly. Maybe you buy it at 30, it goes up to, let's say 100, and you sell, 50% of it, and then it only comes back to let's say 80. So that's, in that situation, yeah, you're still going to be able to buy in for lower, but you're not going to have the perfect, double up or flip up of accumulation. So the easiest strategy, the one that you got to realize that, you guys that are on this call, we've actually talked about crypto a few times before. So I know that you guys have a little bit tighter grasp on it. But I also speak to a lot of people that, have never bought or done anything with crypto. And the easiest way to get them involved is say, hey, buy it and hold it. That's it. So it depends on how much you're willing to work and how much you're, dedicating your time to do the other strategy. So it's really up to you. But yeah, this is the strategy that I use a lot as well. Just because I can get out some of my and then buy more in. So I can get out towards the top and I can buy back in towards the bottom. But again, anytime that you're touching your crypto, there's more chance for you to F up or mess up your crypto. So that's why the most universal method is just buy it and hold it. You don't have to worry about it.
No, thank you. I appreciate it. I'm with Tamika. I'm going to give it a try. Thank you for asking that question, Tamika.
Yeah, thanks again, Tamika, because I do a lot of these Zoom calls and I will go through all this stuff and I won't get any questions at all. And I just know when I was starting out, I was kind of nervous to ask questions, but the best way to do it is to ask questions, because it's almost a guarantee that if you ask a question, someone else was thinking about it. And if they weren't thinking about it, it could still be helpful for them. So thank you again, Tamika, for asking that question. Too often I have these calls and it's not engaging enough. And I really like to rather engage with you than just to say, this is what you do, and then end the call. So thank you again. So with that being said, are there any other questions or any other quick topics, or it doesn't have to be quick? I just said that, I don't know why. Any other topics that you guys want to cover?
Okay, not to totally follow everything Tamika's doing, but
hey, no, man, when you find something that works, you better follow it. I didn't come up with this.
I'm sorry.
Hey, if you find something that works, you gotta use it.
But when you asked that question about the infrastructure bill, I've been, I'm not sure if I have the grasp that you guys do of it, but what the small parts that I've heard of it, I actually heard that part of the bill in terms of like how are we going to pay for everything, one of the ways he's going to raise funds is he envisions taxing crypto. Like it's explicit in the language. Everything else I feel like in these groups or different trainings I try and listen to, a lot of it is conjecture, but not it's not confirmed. But this bill has language like I'm going to you know, in sophisticated words, but they're going to they're going to tax it. So is that why you asked that question, or is it more still concerned about the amendment, or is it both things that are making it more volatile?
Well, I think Tamika was just saying, because in the bill there's just like you were saying, I think it's okay for crypto to be taxed, but it's the way they want to tax it. They want to tax it for every single transaction that happens, meaning that like, you know, when I buy crypto, it gets taxed. When I sell crypto, it gets taxed. When I swap it from Bitcoin to a stable coin, it gets taxed. When I move it from my, like I have a bunch of wallets. Like I have a Trust wallet, a Coinbase wallet, a Binance wallet, a MetaMask. I literally have like 3 MetaMask wallets. I have a Yuri wallet over here. I have a Daedalus wallet. I have so many wallets. And what they're saying is they want to tax whether I'm just sending money to myself. If I'm sending money from, you know, my MetaMask to my Polygon wallet, they want to tax that, which there's no reason for that. It doesn't make any sense. So it's like, I think some of those were my biggest concerns of like how they want to tax. I'm okay with paying taxes. It's just, you know, I get that. That's fine. I'm paying taxes. I'm making money. It sucks, but I get it. But they're trying to like overtax in a sense. And I think that's what a lot of people are worried about. So they've rewritten the language a few times so far, but they still haven't come out with the final vote. So we're all kind of still waiting in the wind. So I'm not sure if you had a specific question for Tamika. I'll let you guys handle that.
No, not just you know, for going further down the road, because I was thinking similarly, and I'm just happy she asked before me, because I'm not even sure I would have asked.
Right. Yeah. So definitely go ahead, Tamika. Go ahead.
Sorry, the reason I had asked, I didn't know the details of the bill. Like matter of fact, I found out Justin on the chainers, it was the Earn Your Leisure chain meeting. And when you guys brought it up, I knew like, okay, this is probably gonna put a lot of fear in a lot of people, including me. So I was like, okay, are people just gonna sell and I'm gonna miss my opportunity to make some money? So I didn't know the details of it, but I just knew that, okay, it didn't sound like anything too good for crypto. So yeah.
Yeah, you're on point with that. And yeah, Tamika, if you so I just had someone the other day ask me if they should sell some of their Ethereum, and I gave them my opinion. I said all the same things I said to you guys. I said, oh, we've been up for about 18 out of 20 days. I think we're gonna have a pullback. I think, you know, we're gonna fall back to here. And that the price of Ethereum at the time was, I think, 2,800, 2,700. And so I said that to him, but at the same time, like Yah was saying, I'm a hodler. I hold my crypto for a long time. I don't plan on like getting in, getting out all too often. So only on like bigger moves, right? Like the example I showed, 30 to 60,000, that's doubling your money. Like, yeah, like maybe you should get out a little bit if you doubled your money. But if you bought it at 25 and it goes to 28, like for me personally, like I would still probably leave it in there. That's not a huge move. For if it goes back to 25, I'm just going to try to buy more. But some other people, you know, may think differently. So anyway, I told him I gave him my view. I said, I think it's going to pull back, and then you'll be able to buy in lower or buy in, you know, at the moving average. So he swapped into a stable coin at 27, and it went to like 29, and he like swapped back into Ethereum because I'm going to miss these gains. And then like, you know, and now it's back at, you don't want to get in and out. You don't want to constantly play that game. So I don't suggest that. I don't suggest, you know, you buy it today, you sell it tomorrow. You buy it then, you sell it the next day. Like the way I do it is the bigger pullbacks, right? Like when Ethereum I was buying the first Ethereum I bought for this bull run was at like $1,400. So I was buying it at 14. When it went up to like 44, like I took some profit there. And because I expected it, we were so overflated, we were so far away from the moving average, I expected it to come back towards the moving average, right? So then, but like if it's just something small, like if it's going from 17 to 2,000, like for me, I don't think that's a big enough move for me to get in and out. Now, if I'm doubling my money or something, then maybe I take half of the profits out. Like if you like were lucky enough to buy Bitcoin right at 30,000 and now it's up to 45,000 and you want to take out like 50%, I wouldn't be mad at that. Like I said, anytime you take profit is not a bad day. But for me, I'm trying to just gain more. I'm trying to accumulate more crypto. So that's my goal. So I'm not always just taking profit for the couple bucks. Sometimes it makes more sense to wait for the bigger drops. But again, that's a personal decision. That's something that you guys, you feel out and you make your decision for that. So, but really good questions, guys. I really appreciate where you're coming from with that stuff. So do we want any more further clarification on anything or any other questions going forward in regards to this stuff?
This could just be the list that you were laying out, but you didn't, when you were mentioning coins you have on your watch list, you didn't mention Matic. Are you cool off of Matic because of the update or just because it's kind of low to sideways right now?
Well, Matic is a good token, and I think it will do well. It's critical for now for Ethereum, but at the same time, it's a layer 2 solution. So let's say something comes along and it's better than Matic. Well, like Ethereum has no ties to Matic, so if something's better than Matic, then Ethereum's gonna use something better. I think a Matic will go back up. Matic really doesn't have anything to do with the EIP 1559 because EIP 1559 isn't quite making Ethereum faster. It's trying to make it deflationary. Once they move to POS, proof of stake, then it'll be a little bit of a faster chain and the fees will be a little bit less. So EIP 1559 doesn't solve the fee problem with Ethereum. It tries to make it deflationary. So those are a little bit two separate things. So the reason why people like to use Matic is because the fees are much, much lower on Matic. So Matic still can go up. Matic is still a good token and it still has room to run. You can see here that, so this exactly example, let me show, remove this, grab that. Okay, so it came down, right? It went up. This is a trend line. This diagonal line is called a trend line. So it broke that trend line and now it's gonna come back down and it's gonna test the trend line. And if it holds the trend line, it should bounce back up. So, it's only like $1.09 right now. And it could probably go back up at least to the next $1.50 level before it meets resistance. And it comes back down a little. And then we try to break through resistance. And then it comes and tests resistance and then goes back up. But yeah, Matic is a good token. It's just, remember, I was trying to get everyone focused on the big three, Bitcoin, Ethereum. If Matic is your third for your big three, then maybe Matic for you. I would suggest Cardano or Chainlink, something like that. But Matic is a good token. So if you like, I just didn't mention it because I was just focusing on the big three. But Matic really doesn't have too much to do with EIP 1559 in my view because it's a layer 2 solution. So it's just, so you have Ethereum and Matic goes on top of Ethereum to make the fees less. But eventually Ethereum will become proof of stake, meaning that I don't know how useful Matic will be. I can try to do a little bit of research and have a better answer for you with that stuff, but that's kind of where I'm at with it right now.
Thank you. I mean, that was a good answer. If anything, maybe people will sell because they will confuse the update like I did and think that the update did actually solve some of the fees, which it didn't. So just kidding. Okay.
Yes. So the update was more so, and I think I sent a really good article out. I'll try to find it and share it with you guys. But it specifically wasn't for fees and speed. It was more so working towards that deflationary aspect. Like this site, the ultrasound money site, this was the big thing about it. The burning of Ethereum, making the total supply less. That was the big thing with EIP 1559. And it was also a really big thing because Ethereum's network is so big. So when you implement a change like that, there's a lot of work that has to be done and there's a lot of things that could go wrong. So one of the biggest things was that nothing really went wrong. It was a successful update. So that was like the big like cheering moment, like, oh wow, like they did this whole thing to this huge network, they updated it and like nothing really went wrong. But you can see the fees are still like, the fees still go up. They have a set price, but the set price fluctuates. So it's not really like a set price. Like if we're all trying to do the same thing on the network and transfer something, we all originally have to pay like 38, right? So that's the price. So we all would have to pay 38, but then you can add to it and make it faster. It wasn't specific, like previous to the update, I could go in here and I could say, oh, well, the gas is 38. I'm gonna put in 100 gas, so mine transaction happens faster. And yeah, so I'll send you the article as soon as I find it. It's in my Telegram somewhere, so I'll just forward it back out to the Earners on Chain chat, and you guys can check it out.
Awesome. Thank you.
Yeah, no problem. All right. Anybody else? NRC, Keyshawn, Terry, you guys are doing okay? All right, I'm gonna take that as a yes. All right, guys. Well, that's pretty much it. I'm gonna try. Hopefully, everyone is okay. I'm gonna be putting this up on my YouTube. So I meant to mention that in the beginning. Is everyone okay with that? Your voices may be on there. I hope that's not something anyone will be upset with. If so, just send me an email and I'll make sure I take it down because I don't want to upset anyone. But other than that, I appreciate you guys for tuning in, and talk to you guys soon. You already know where to find me. The YouTube, IG, just DM me, hit me up on Telegrams, and you know I'll make myself available best I can. All right, guys. Happy Sunday. Have a good Sunday. I'll be talking to y'all soon.